All right, folks, welcome to this pre-market analysis review show where Daamen's going to walk through some of the key levels that he picked out last week and show you what happened and how he could have potentially traded them. So Cass is just about to jump on. If you do want to get access to his pre-market analysis for the week ahead, which is obviously going to be more beneficial, then there's a link below, or click the join button below and you can get access to it there. All right, let's get on with the show. Over to you, Cass.
All right, so we are at the euro dollar chart, and with the members last weekend, we discussed going long on the euro dollar at the retest of this blue box. Now, the video came out a bit later, so price was already at this area. Unfortunately, we didn't get a retest there to enter long. Let me change that color real quick to make it a bit more clear. So we didn't get a long entry, but look how it played out. It perfectly tagged the level which we highlighted before it happened. Of course, this is all pre-market analysis, and this was the key level, and look at the reaction we've gotten from that level there. That's why these key areas are so important, and that's why we give you those areas so that you know where you should be looking for an entry and where you would likely to get out. So according to how I trade, I didn't get an entry there. But if you got a long entry anywhere, you knew where the target should be, you know where your stop loss should have been, and you've gotten a nice trade out of this session. This would have been around 45 pips, so that's a decent move. Quick recap why we were looking for longs. Let's go to the daily time frame. As you can see, there were two equal lows on the daily time frame, and generally speaking, there is liquidity below equal lows. And what I like to see is absorption of liquidity and basically weak hands getting shaken out of the markets. And that's exactly what happens here. We broke below the range, so below the double bottom. And then quickly, within a few days, price aggressively moved above. And that indicates that if there have been people selling the breakout to the downside, or people that were long anywhere in this area, usually put a stop loss below. So as soon as price breaks that area, you get a lot of active selling here. But then you can see that price aggressively moves back above that level. Now, that indicates that the sell side liquidity has been absorbed by a bigger player in the markets that wanted to be long and that used that liquidity to fill his long orders. That gave us the long bias. And that's also what we explained during the pre-market analysis. So we don't just give you the levels and wish you good luck. We actually tell you why these are the best levels to do business at. So as you can see, this blue box lined up with that daily key level. A lot of touches in this area. Generally speaking, levels flip. So if this is resistance, it usually becomes support and takes off. That's exactly the idea we had here. As you can see, it broke that area. At this point, you have a bullish bias to target the next level above market, which was this white line. Anywhere in this area, you should have been looking for longs to target that level, and it played out nicely. So that's it for the euro dollar. Clean move. I didn't get an entry there, but I'm sure some of the members did. So let's dive into another chart. So this is the USD Canadian, and we discussed in our pre-market analysis last weekend that we wanted to be looking for shorts at some kind of structure and anywhere in this area. Now, unfortunately, price fell down and didn't give an entry there. But why did we want to go short there? Again, let's go to the daily time frame. And as you can see, on this particular day, look at that bearish candle. Look at that bearish hammer, inverted hammer. I don't know what you want to call it, but look at the location. We took out this very important swing high, and we took out this very important swing high, and then failed to close above and quickly fell down. Again, this indicates that if there was buying anywhere in this area, people buying a breakout of this area, and trust me, people are. If you are watching a order book at these key areas, it's not available in Forex, but if you trade any other market like the bond or any other bond market or stock market, and you look at the order book and you see what happens at these areas, you can see massive buying at the break of resistance. And once again, look at the bearish candle there. So probably a lot of massive buying there, but price quickly falls back down, which gives us a bearish bias. Now, why do we want to look for shorts in this area? Because that's below the daily key level. So we spoke about the best thing we could have seen was this happening and then a break of structure to go short. That didn't happen. Price fell down. So the next area of interest would be a retest of that structure, which unfortunately we didn't get. As you can see, there was a bit of structure here, but price fell through and never really gave us that retest we were looking for. Of course, the next area to target when short is the next area of structure, which is around these touches that were closest to the market. As you can see, there is a massive level there. But this is the last bit of structure, the first significant level. If price went to do this, that was most likely to be tagged. Again, we didn't get an entry there, but again, the key level worked out great. The last one I want to go over with you is the S&P. We've highlighted these levels again in advance, and this white level I spoke about. I really expected a level to be tagged this week because of previous price action, because of this false breakout and the absorption of liquidity below these equal lows, which happened. And as you can see, price quickly moved to the upside. So again, another great trade there. Another opportunity to have made a lot of money there. So as you can see, this was the last high. Before that fall down, this was also a new all-time high, which is always a key level to look out for. The reason we've picked that level is, generally speaking, if you have a false breakout on one side of a range, the market tends to move to the other side of the range because that's where liquidity is, and liquidity tends to work as a magnet. So this was the low end of the range, 3 equal lows there. Most likely a lot of liquidity below market. So people that would be selling a break of that area, and people that were long anywhere in this area usually place the stop loss below structure, below a level. So you could expect a lot of active selling below that area. And again, then you want to see how price reacts there. Quickly fell below it and then quickly closed above it. Again, that's a trigger to go long. In these sessions, I explain more about that, but that's a trigger to go long. Price retests the origin of the move and then quickly moves up. The next area of vulnerability, the next area of liquidity, the range high was this white line. And that's why we spoke about, if you are going long anywhere in this area or in this area, this should be your first target. This is where weak hands are. If there is going to be a fake out or a stitch up, it would have been at that area. And as you can see, we broke it, but now price is really ranging. Now, do you want to sit there in that ranging, or do you want to have taken profits at this area, then wait for another setup and then trade again? So that's it for the recap of the levels. As you can see, they played out very, very nicely. Some of the levels I spoke about haven't been touched yet and are still in the markets. Again, the members know all about this. Now, if you are interested in this, and if you really want to take your trading to the next level, get some coaching, be prepared every single week, click the link down below. There you will find more information about it. There you can subscribe to this service, and I really hope that you do, because it's very, very valuable. If you have any questions, leave a comment down below and we would really love to answer those. So speak to you guys in the next session and have a great day.